Senate Committee on Banking, Housing, and Urban Affairs will come to order. We're in the hybrid format again today. This hearing is a continuation of our efforts to enact a long-term reauthorization of the National Flood Insurance Program this Congress. Welcome, Mr. Maurstad, who's joined us before, and thank you for your years of public service and elective office in Nebraska and the work you do on with flood insurance and other things. Flooding is the most common, the most costly natural disaster facing our families and businesses and communities all over the country. Climate change only makes it worse. Last week, as Senator Tester pointed out, and we see particularly those of us who had the good fortune to take children or to Yellowstone and have almost a personal feeling for Yellowstone. Senator Tester talked about the historic flooding at Yellowstone in Montana, and I assume in the southern entrance in Wyoming also, causing closures that hurt economies of nearby towns during the tourist season. Just this year, we've seen flash flooding in West Virginia and Alabama. We've seen ice jam flooding in Alaska. We've seen heavy rainfall flooding in Oklahoma and Arkansas. We've seen heavy rain, snow melt, and ice jam flooding in North Dakota and Minnesota. And that's before hurricane season has even begun. FEMA personnel are already preparing for the 2022 hurricane season, expected by the National Oceanic and Atmospheric Administration to be above normal for activity. This flooding is devastating to families and homes and businesses and communities. These disasters fall hardest on low-income families and communities who have fewer resources to prepare for them and respond to them. We need to help our families and communities adapt and become more resilient to the flooding we face now in the coming decades, and whenever possible, avoid damages altogether. Nfip is critical to that effort. It provides $1.3 trillion in coverage to nearly 5 million homes and businesses in some 22,000 communities. Unlike a private insurance company, Nfip does not just provide insurance. Its job isn't just to help with recovery, but to prevent and minimize damage in the first place. Nfip combats the overall threat of flooding through 4 related components: flood insurance, floodplain management, floodplain mapping, and mitigation. The bipartisan infrastructure bill offers a down payment on new opportunities for communities to help homeowners stay out of harm's way, but we need to do more. Infrastructure investment, of course, was a good start, supported by most people in this committee, but because of climate deniers in the Senate, and there were many of them, and because of our collective failure to fight climate change, that investment in the infrastructure will surely not be enough. And as we fail to fight climate change, the costs keep rising. Look what happened again in Montana. We must reauthorize and strengthen FIB. We must invest in flood mitigation before disasters happen. Last week, we heard from practitioners working with communities and families. We learned about barriers to underserved communities and families participating in mitigation programs. We learned about the benefits of expanding the community rating system to help communities reduce local flood risk. We learned about the importance of providing better risk information to communities and property owners, both through improving mass mapping and risk communication products, and through disclosure of flood hazards to prospective owners and tenants. And we learned the importance of building state and local capacity to carry out our floodplain management and mitigation programs, especially for small and rural communities. Today, we'll hear from FEMA to discuss the status of the program, including their ideas for long-term reauthorization and the implementation of FEMA's new Risk Rating 2.0 initiative. FEMA has submitted a package of legislative proposals for our consideration. I know that Mr. Maurstad will talk about those. There will be a robust discussion of those issues today. I'm interested in recommendations that you offer for ways we can help strengthen FIP so it can ensure long-term program stability while providing reliable access to insurance for property owners and renters, so it can address affordability concerns, particularly in light of Risk Rating 2.0, so that it can ensure that more people are aware of their flood risk and insured against losses, and so that it can help communities reduce our overall level of flood risk through investments and improvements in mapping and floodplain management and mitigation. As we discussed last week, it's no secret that NFIP reauthorization has proven to be a challenge. I think we've done extensions maybe 20, 21 times, something like that. It's a complex program. Mr. Maurstad knows that better than anyone, with multiple goals, with implications for many of the things we care about. I believe it's possible for us to come together. The ranking member and I have had some discussions. We will have more come together to reauthorize and improve this program. I look forward to continue working with Senator Toomey and members of this committee. Many members of the committee on both sides, this is less a partisan issue than a geographic one, but the whole country suffers as Louisiana or Montana or Rhode Island or Pennsylvania does. So all of that's important. Senator Toomey.
Thank you, Mr. Chairman. Acting Associate Administrator Maurstad, welcome to the committee. The flood insurance program was last reauthorized on a long-term basis in 2012. That reauthorization expired in 2017. And Mr. Chairman, you're right. The short-term extensions have occurred 21 times, and that's no way to run a railroad. So I am pleased that the chairman is interested in working in a bipartisan fashion to see if we can get a long-term reauthorization done with the reforms that this program needs. And let me take a moment to remind everyone of the scope of the challenges the NFIP faces. Since 2000, NFIP has borrowed from the Treasury in 11 out of 22 years. That means half the time this insurance program requires additional federal taxpayer funds in order to subsidize policyholders. Today, NFIP's current debt to the Treasury stands at $20.5 billion. Interest payments alone are between $300 and $400 million a year, and the $20.5 billion in debt excludes the $16 billion that was just arbitrarily forgiven in 2017. Now, some of my colleagues have argued that NFIP policyholders couldn't possibly repay this debt, so even the rest should just be forgiven. But before we consider such a drastic action, we really need to ask ourselves, how did we end up in this scenario in the first place? The answer is simple. This is a broken program, and the subsidies, by their nature, are badly designed, and the program systematically underprices flood insurance. It's mostly the fault of Congress, not FEMA, that are the root causes here. FEMA has fortunately worked to improve NFIP by implementing a new price rating for flood insurance premiums. It's known as Risk Rating 2.0, and it better aligns policyholders' premiums with their actual flood risk. Risk Rating 2.0 is producing rates that are more equitable by phasing out most NFIP subsidies. 23% of policyholders, over 1 million families, were actually overpaying for flood insurance, and these families will now see a decrease in their monthly premiums. Congress should work towards strengthening Risk Rating 2.0 and eliminating any subsidies that do not align with price risk. During last week's hearing on NFIP, I discussed several of my priorities for reauthorization. First, we should encourage more private capital in the form of private policies and private reinsurance. My top priority for reauthorization is to eliminate any barriers that exist to obtaining private flood insurance. Second, we should do no harm. We should be protecting the transition to actuarially sound premiums, which is underway. Any effort to slow or interrupt that progress should be rejected. Third, if subsidies are going to persist, they need to be better targeted. FEMA is proposing a new means-tested assistance program for current and future low and moderate income households. I'm open to finding ways to help current low-income homeowners afford flood insurance. However, any means-tested subsidy should replace existing cross-subsidies within NFIP. Adding another subsidy on top of existing cross-subsidies moves us further away from actuarially sound premiums. And fourth, we should improve communication so that homeowners and home buyers know and understand the flood risks of properties that they are considering. FEMA recently submitted to Congress NFIP reauthorization proposals, including several encouraging features. One proposal would prohibit coverage for a new category of excessive loss properties, which are properties that have flooded multiple times. This is a good policy, and it's worthy of very serious consideration. As a general principle, we should not provide flood insurance subsidies that encourage people to live in flood-prone areas. That might seem like common sense, but it's what we do now. While excessive loss properties are not the majority of homes in NFIP, they do constitute a highly disproportionate share of losses. It's unfair and senseless to force taxpayers to continuously foot the bill to bail out properties in these risky areas. Another promising FEMA proposal would prohibit coverage for commercial properties and new construction in high-risk areas. This would help to mitigate risk in NFIP by eliminating coverage in heavily flood-prone areas, and would also encourage competition in the private market for non-residential properties. One important NFIP reform not included in FEMA's reauthorization proposal is mid-year cancellation. A barrier to more people choosing private flood insurance is the fact that FEMA offers a very short window each year to switch over from NFIP to a private provider. Previously, FEMA had allowed policyholders to leave NFIP for flood insurance and receive a pro rata refund. However, FEMA changed this policy in 2019. Now, a pro rata refund is available only in very limited circumstances. This effectively locks in all but the most diligent policyholders into their NFIP policy. While there are improvements that can be made to FEMA's reauthorization proposals, I'm pleased to see that it has given serious thought to reforming NFIP. It's actually pretty rare to see a federal agency request, as FEMA has done, that Congress reduce the agency's borrowing authority. I commend FEMA for recognizing that NFIP must be financially stable to be a sustainable program. A long-term reauthorization must continue to move NFIP in a positive direction to protect taxpayers who currently bail it out year after year. I recognize that we can't fix all that's wrong with NFIP overnight, but we should use reauthorization as an opportunity to move it in the right direction. I stand ready to work with the chairman and my colleagues to achieve that goal, and I look forward to discussing FEMA's reauthorization proposals. Thank you, Mr. Chairman.
Thanks, Senator Toomey. Today, we're joined by David I. Maurstad from FEMA, from the Federal Emergency Management Agency, to share his ideas, FEMA's ideas about ways to improve NFIP and better protect our communities from flooding. He's the Acting Associate Administrator for Resilience at FEMA. Prior to his appointment as Acting Associate Administrator, he served as Deputy Associate Administrator for the Federal Insurance and Mitigation Administration and the Senior Executive of the National Flood Insurance Program since 2018. He's previously served FEMA as a Regional Administrator and has over 25 years of experience in the insurance industry. His public service includes serving as a mayor, a state legislator, and lieutenant governor in his home state of Nebraska. Mr. Maurstad, you're recognized for 5 minutes. Welcome. Thank you for joining us.
Thank you. Good morning, Chairman Brown, Ranking Member Toomey, and members of the committee. Thank you for the opportunity to testify today in support of a package of 17 legislative proposals that would reform FEMA's National Flood Insurance Program. For more than 50 years, the NFIP has been critical to the nation's resilience policy. Today, as our changing climate poses a serious threat to our nation, and as the number and severity of disasters continues to grow, the NFIP requires structural change. Since the last multi-reauthorization in 2017, the NFIP has experienced 21 short-term extensions and 3 brief lapses. The short-term extensions are disruptive and cause existing and potential policyholders to lose confidence in the NFIP. We believe that a 10-year reauthorization with comprehensive program reforms is an imperative. The 17 reform proposals put forth are guided by 4 key principles. First, ensuring that more Americans are covered by flood insurance by making insurance more affordable to low and moderate income policyholders. Flood insurance can be unaffordable for some policyholders. Under current law, FEMA does not have the authority to establish and charge premiums based on a policyholder's ability to pay. Although the NFIP offers mandatory discounts and cross-subsidies, those discounts and subsidies do not take into consideration the policyholder's financial need and, in fact, can make risk communication difficult because many people equate lower cost with lower risk. Reforms that address affordability, such as the use of a targeted assistance program, can offer low and moderate income, current and prospective NFIP policyholders a graduated risk premium discount while providing them knowledge of the full risk price to communicate a property's true flood risk. Second, communicating risk in real time and providing Americans with tools to manage flood risk, reforms that increase the scale and frequency of flood mapping and incorporating emerging priorities and technologies into the flood hazard and flood risk identification process will expand the ways in which the NFIP communicates risk. Raising awareness of true flood risk enables people to make informed decisions about their family and property. Home buyers and renters may lack awareness about flood risk when they complete real estate transactions. Reforms that would require states to establish minimum flood risk reporting requirements for sellers and lessors before residential transactions close would address this challenge. Additionally, we need to reform how we measure and communicate flood risk. The nation's evolving risks require flood hazard information that is more robust than the special flood hazard area and 1% annual chance flood elevation. Third, reducing risk by addressing extreme repetitive loss properties. Previous losses are a significant indicator of risk, meaning that if a property flooded before, there's a high likelihood that it will flood again. Since 1978, nearly 100,000 structures have had 2 or more paid losses. Nearly 1,000 have suffered 10 or more losses. The NFIP must have better tools to address insured structures that have experienced multiple flood claims. About 2.5% of insured properties are considered unmitigated repetitive loss properties. Reforming the NFIP to institute an objective threshold to deny coverage to the most flood-prone structures would discourage unmitigated rebuilding in areas with a history of flooding and reduce financial risk to the NFIP, while ensuring that coverage is still widely available to individuals, families, and businesses who might not be eligible for private market coverage. Fourth, instituting a sound and transparent financial framework that allows the NFIP to balance affordability and fiscal soundness. Without this in place, the longevity and sustainability of the program is at risk. The NFIP currently carries $20.5 billion in debt to the Treasury and pays approximately $400 million in interest expenses annually. As currently structured, the program is unable to pay this debt back in full. Canceling the NFIP's debt provides the program with a solid foundation that can support financial reforms around borrowing authorities, future interest, enhanced liquidity, and an upper limit for the size of an NFIP event. These reforms address fundamental structural challenges and are essential to building a viable NFIP. It is critical that Congress provide urgently needed multi-year reauthorization and concurrently reform the NFIP. FEMA looks forward to working with Congress to develop a long-term solution that addresses the needs of the NFIP, its policyholders, and the nation. I'd be pleased to answer any questions.
Thank you, Mr. Maurstad. Several mitigation-related questions, if you would answer briefly, because I have a number of questions I want to get to. Last week, we heard testimony lower-income homeowners, those in lower-value properties, often face barriers to participating in the Flood Mitigation Assistance Program, particularly not being able to afford matching requirements or receiving far too little assistance to be able to move elsewhere. Would you commit to work with us to address these barriers?
Yeah, absolutely, sir.
Thank you. We've also heard that small and rural communities often lack capacity to fully implement and take advantage of mitigation and floodplain management opportunities like CRS, or even to meet basic requirements. Would you commit to providing additional technical assistance and capacity building resources to help improve our resilience?
Yes.
Okay, thank you. The infrastructure bill provided a down payment towards addressing our mitigation needs, but we still need to do more. Could you estimate what it would cost to mitigate just the properties currently considered repetitive loss or severe repetitive loss?
So this one will take a little bit more than a yes or no. Of course, if you, it's going to fluctuate. Inflation will impact the average value of a home. The number of homes fluctuate. With the additional funds that you supported and pushed forward for flood mitigation assistance, we're hopeful to be able to keep pace with the increasing number of repetitive loss homes. But roughly, you could do between $18 and $20 billion to take care of the current repetitive loss issue.
Thank you for that precise answer. Premium affordability has been a major concern of homeowners and members of this committee, certainly from Louisiana and Rhode Island and other states exposed to the Gulf or to the Atlantic. FEMA's called for nearly $5 billion to carry out a new means-tested affordability program over the next 10 years. Talk about the benefits, if you would, Mr. Maurstad, of this affordability program in helping more people obtain or maintain the insurance they need to protect themselves.
Sure. FEMA delivered an affordability framework to Congress in 2018 that highlighted the number of property owners in the special flood hazard area, the high-risk area, that are low to moderate income in their particular area. And it was roughly about 30% of our current policyholders. That means that there's only about 35% of properties in the high-risk area that have coverage. So it's very easy to see that many low to moderate income policyholders in the high-risk area don't have the protection that they need. We need to close the insurance gap. We need to have more insured survivors after events. And the means-tested assistance program that we put forward very much targets the policyholders that need it the most based on their means to pay instead of the type of property they have or where their property is located.
Thank you. Probably my last question. I want to revisit a topic we touched on last year. That's NFIP debt. Debt cancellation is often, maybe always, controversial. Since Katrina, NFIP has paid over $5 billion in interest to the U.S. Treasury on the program's debt, over $400 million per year. Can you talk about the effect of that debt and interest payments on the program and explicitly answer why you've included a proposal to cancel the debt in your package?
Sure, thank you. So it's the third largest expense in the program. And quite frankly, it's unconscionable that we're taking current policyholder premium dollars to pay interest on a debt that was accumulated because of past catastrophic events. The reason that we are proposing to have the debt canceled is so that we can start out with a clean slate and implement our sound financial framework proposals, which means currently, if nothing is done, there is a less than 5% chance that at the end of a 10-year period, there will be a positive number in the National Flood Insurance Fund. If we institute the recommendations of FEMA from career staff, we would be looking at a 75% chance of having a positive balance in the National Flood Insurance Fund at the end of 10 years. So it's the basis for being able to start out, implement the reforms, be able to manage the program appropriately, indicate that we would have the responsibility to run the program, to take care of a 1 in 20-year loss exceedance level, and then allow for the annual appropriation for the difference between the dollars that we should collect and the dollars that we can collect because of congressional restrictions. So it's fundamental that the debt be canceled so that we can put the program on solid fiscal and financial ground so that we can sustain the program for decades to come.
So I think you were clear. I want to make sure. We couldn't do a reasonably good 10-year reauthorization without debt cancellation.
No,
correct?
not in my view.
Okay. Thank you, Senator Toomey.
Thank you, Mr. Chairman. I think it would be wildly irresponsible to do a debt cancellation without fundamentally changing the dynamics that put us in debt in the first place. Otherwise, we're simply inviting the next wave of debt and then the next cancellation and so on. I have several questions for you. One, I'd like to talk a little bit about this means-tested subsidy. And, I think we should acknowledge that any kinds of means-tested program or subsidy for anything, and this is true of Medicaid, food stamps, housing, you name it, it has the unintended but unavoidable consequence of creating a very high marginal cost for someone to elevate their skills and earn more money. Because if, in so doing, you become disqualified for one of these programs, it's equivalent to a very high marginal tax rate on your increased earnings. In the case of the flood program, it also introduces the moral hazard of increasing the likelihood that someone might choose to live in a flood-prone area, at least somewhat more likely than if they had to pay the full price and that's problematic as well. But my understanding is the design of your proposal permits this assistance to be provided to primary residents in which the residing family can earn up to 120% of the median income for that region. So that means in these regions, the arithmetic is that a majority of people would qualify. That's mathematically the consequence. So could you help me understand why we come to the conclusion that we want to design a subsidy that applies to not a subset of the lowest income people, but actually a majority of people in most areas?
Yes, sir. So first of all, there are a lot of working class families that are currently living in high-risk areas because that's where they are able to have employment, or they have lived there for generations. So the premise is to close the insurance gap. As you certainly are aware, after every major flooding event, there are not enough insured survivors. Generally speaking, it's 1 out of 3 at best of the homes that are damaged have the necessary insurance coverage they need to recover. So they have to look to other ways to be able to get on that road to recovery, while folks that have the insurance do have a path to begin the recovery process. So we think it is good public policy to assist low to moderate income policyholders have the necessary protection they need to protect their family and the lives they built.
But you're talking about subsidizing a majority of policies, and that is very counterintuitive to me, and I think it would be to a lot of folks. Let me ask you another question. My understanding is FEMA's proposal for this means-tested assistant would permit policyholders to simply self-certify that they're eligible. Self-certification obviously creates a risk of significant fraud. That's why the GAO has sensibly called for federal agencies to have a mechanism to validate self-certification. And we've seen this recently, the pandemic-related relief. There's massive fraud. The SBA probably issued over $1 billion of COVID-related loans to businesses that were not eligible. We're still going to find out massive numbers of people with invalid unemployment claims. So my question is, what kind of processes do you envision to ensure that people who self-certify that they're eligible are in fact eligible?
Yeah, so first of all, self-certification is one of the possible ways for which somebody could be able to be eligible for the program. We would need to design the affordability program if given the authority to do so. So the request is to have latitude in how we were to design the program to make sure that it is both available to policyholders, property owners, but also so that we can have the right level and means of accountability. So the actual design will come after we get the authority. That's just one of, I think, 4 possible ways that a property owner could attest they are low to moderate income.
So you don't sort of reflexively oppose having a mechanism to verify eligibility?
No, I think that's an important part of any program.
Thank you, Mr. Chairman.
Thank you, Senator Toomey. Yes, Senator Reed from Rhode Island is recognized.
Thank you, Mr. Chairman, and thank you, Mr. Maurstad, for your public service and your being here today. One of the principles that we have to fix is the flood mapping process. We've been waiting for decades to see that all floodplains have been properly mapped. And can you give us a comment on how we're doing in terms of FEMA's responsibilities to map everything?
Well, currently we have met our OMB requirement of having 80% of the Nfip maps at new validated engineering meeting those requirements as set forth by the Technical Mapping Advisory Commission. We've also made great strides in the mapping of coastal areas. But we do need to move beyond just providing a regulatory product that outlines the 1% annual chance high-risk area. We are in the midst of developing what we've called the future of flood risk data that will allow us to build products with local communities that look at future conditions because of climate change, that other folks can use to build the tools they need at the local level. So we are absolutely committed to improving, continuing to modernize the flood mapping, flood risk identification. I can see in years down the road that we potentially don't even call it mapping anymore because of the technological changes that we have. But we definitely need to do more in the risk communication area.
In terms of future conditions, there was just a story in my home state, coastal community in Warwick, Rhode Island. The local TV station suggested that it would be 8 foot underwater if we had a serious hurricane. That would cover a lot of territory, including homes that are insured and non-insured. Will you incorporate this future conditions, and also will that affect the rates that you're charging?
Well, so certainly we have to look farther down the road than we have been looking, and we've generally used historical data and the current circumstances in developing the regulatory requirements that we have right now. And so certainly subsidence, certainly large catastrophic flood events are going to be in our future, and we have to help communities and states prepare for them, and part of that is sound risk identification and sound risk communication.
Now, the Flood Mitigation Assistance Program under the Bipartisan Infrastructure Law received $3.5 billion. There are many cases in which we've made money available that doesn't show up in every state in the same proportion, particularly smaller states. Can you comment on your proposal to spend those funds?
Yeah, sure. So the Flood Mitigation Assistance Program is looked at across the country. We have a commitment to making sure that our mitigation programs are equitable, and so that means not only high population areas, but those areas that aren't as populated but still have flood risk, disadvantaged communities, socially vulnerable communities. And so we're using that as a factor in as we evaluate the applications and sub-applications that come in from local and state government to make sure that we're delivering our mitigation programs in an equitable fashion.
Thank you very much. With that, I will yield back my time.
Thanks, Senator Reed. Senator Kennedy from Louisiana is recognized.
Mr. Administrator, I don't know you very well. I've watched you in some of the testimony. You seem like a very nice person. I don't want you to be, I don't want you to take what I'm about to say personally. I understand I may be wasting my time today. I believe that FEMA and the Biden administration have made their decision with respect to flood insurance. I regret that, but I believe that's a fact. And most of my people in Louisiana understand at this juncture that the only place they're going to find lower food prices, cheaper gas, a cleaner, safer environment, and affordable insurance is in the voting booth. Because my people, most of them, and I think most Americans have concluded that Republicans aren't perfect, but the other side's crazy. Now, About 500,000 people in my state have flood insurance. And despite what some people say, these are not multi-millionaires in multi-millionaire homes on the beach. These are working people. And there are people in the United States Congress who claim to be for the little guy, but they don't really like him or her very much. A lot's been made about repetitive lost properties, and no fair-minded person would not want to address that issue. I want to address that issue. But this issue also has been demagogued. Of the 500,000 people in my state who have had repetitive losses, that's two or more losses of over $1,000 over a 10-year period, it's 11,000 people. That's about 2%. Of those who've had severe repetitive losses, that's 4 or more payments on claims of over $5,000 over that period. That's 594 out of 500,000. That's 1/10 of 1%. Now, I understand politics, okay? You're trying to make some changes. You're going to accentuate the points that you think will be the most persuasive, but I think we ought to be factual. Why won't FEMA share its algorithm with the American people?
Thank you, sir. And, we look forward to continuing to work with you. We've shared the algorithm. We've put forward on our website the methodology.
No, you haven't. No, you haven't, Mr. Administrator. I apologize for interrupting. But no, you haven't. Let me just ask you directly. Would you, well, first, who owns that? Did FEMA put together the algorithm in-house?
Yes, sir.
Okay. So you did it with current FEMA staff, no outside help?
No, as we do across the National Flood Insurance Program, we rely heavily on the private sector and the contract support
relied
that
on
they
Milliman?
provide.
I'm interrupting, and I'm sorry, but
I know.
Chairman Brown's going to cut me off. You relied on Milliman.
Milliman was one of the
Does
contractors.
Milliman own the algorithm?
No.
Okay. And in this algorithm, you say you can zero in on an individual home and predict whether it's going to flood over the next 30 or 100 years.
We don't.
And that's how you set your rates, okay?
We set the rates based on the individual characteristics of the property.
Right. You say the individual property, not a floodplain. Well, if I
not a
sent
flood
you a
zone.
public information doctrine request and I said, look, I want the algorithm so I can hire somebody to review this algorithm to see what clairvoyant people are telling us about climate change and what's going to happen in America over the next 150 years. Would you give me that algorithm?
As I said, we already have, and we responded
haven't.
to a letter.
No, you haven't.
Yeah.
No, you haven't.
So-
I want the algorithm so I can hire some experts to look at it and either say this thing is watertight or it's grossly political or somewhere in between.
We've put on the web exactly what an expert would need to determine and get to the answer that you
You've put
want.
on the web the
In
bullet
addition,
points.
we
You
put
put
on
on the web the bullet points, just like we got bullet points on our gun control bill. And then we got the bill.
No, we put forth a document.
I'm going to send you a public records document. I'm sorry to interrupt, but they give us 5 minutes.
I understand.
I'm sorry. It's probably like a council meeting to you.
Can I make one last comment?
But I'm going to send you a records doctrine request, and I'd like the algorithm so I can hire somebody to. I'm not saying I don't trust you, but I play poker every now and then with friends. They're all friends, but I cut the cards every single time.
Sure.
And I want somebody who can really look at this.
Sure. Well, what we've posted on the web is similar in fashion to what a private insurance company would have to provide a state insurance commissioner to change rates in the state. But more importantly, GAO has started a study of Risk Rating 2.0 that we're cooperating 100% with, that I'm sure will get to also a lot of the answers that you're looking for.
The government's going to study its own proposals. What could
Morstad,
possibly go wrong?
Mr. Maurstad, Senator Kennedy and others will be sending you written questions, as you know, and you'll have 45 days to respond to them. Senator Menendez of New Jersey.
Thank you, Mr. Chairman, for holding this hearing. And before I get to my questions, I want to note that I find it highly unusual that FEMA sent to Congress an unsolicited 17-section NFIP reauthorization bill that, in my view, will do significant harm both to the program and homeowners alike. Many of the ideas reflected in this proposal were part of a 2017 House Republican bill that was rejected by the Democratic majority. In fact, just last week, E&E News noted the similarities between this proposal and a proposal written by then OMB Director Mick Mulvaney during the Trump administration. FEMA's proposal will lead to more people being uninsured and unprotected against more frequent storms, higher costs for families, and higher barriers to owning a home and a small business. And so I would just say to the chair and the ranking member, there's already a bipartisan comprehensive NFIP reauthorization bill included and introduced in the Senate. The legislation that I've co-sponsored with Senator Kennedy and Van Hollen on this committee, along with 6 other senators, is supported by the National Association of Counties, the Flood Mitigation Industry Association, the International Association of Structural Movers, and others. And so I look forward to working with the chair and the ranking member on this. Now, according to a report by Redfin, 84% of majority Hispanic communities will face increases under Risk Rating 2.0, the highest share of increases compared to other racial and ethnic groups. Historically, Hispanic families have been underrepresented in home ownership, and I believe that Risk Rating 2.0 will only undermine recent gains. The average annual premium in majority Hispanic neighborhoods is $495. However, CBO has found that FEMA's new premium methodology may increase premiums by 4 to 7 times more. That could go from $495 to nearly $3,500. So in creating Risk Rating 2.0 equity in action, did FEMA consider whether the policy would disproportionately burden majority Hispanic communities?
So
I think that's a simple yes or no.
No.
It did not. Okay, why not? Why wouldn't
that's
FEMA
not the-
look at the impact across all communities and attempt to control for disproportionate burdens in any community?
So insurance rates are based on actuarial science, and the manner in which rates are calculated are based on the property characteristics, not the owner of the property.
Oh, so you mean we should make public policy here in such a broad-based area that wouldn't, well, we don't care what happens to Black or African American or minority communities? Is
No,
that what
that's
you're
not.
telling me?
That's not what I said.
Well, that's what you did, though.
That's not what I said at all.
I know, but that's what you did.
No.
I appreciate that FEMA supposedly supports an affordability program to help policyholders get covered. But in order to have an informed discussion around the issue of affordability, FEMA has to fully explain Risk Rating 2.0. Let me be clear, no one, except for FEMA, knows what the full risk premium rates are under Risk Rating 2.0. FEMA has only released limited information on what the first year premiums are with statutory caps applied. So, Mr. Maurstad, will you provide to Congress the full risk rates of what you plan on charging our constituents?
Sure. So we've provided the information that we can provide based on what we know today. You can't predict what the rates are going to be 10 years from now. We know what the full risk rates are now, and they'll be shown on the insurance policies that people purchase, especially those that are on the glide path to their full risk rate.
Well, look, you're calling on Congress to authorize a new voucher program as part of your plan. But it's difficult to know how to tailor such a program if we don't know the premiums you're charging. And listen, you're talking about 10 years. You're telling me you're not going to know what the premiums are the year after? I don't believe that. Our legislation that was signed into law requires FEMA to report to this committee when premiums exceed a certain threshold, and it has not done so this year or in recent years. If FEMA cannot be more transparent with Congress, then it will be extremely challenging for us to address affordability. You have failed to address what the statutory obligations are. Now, one of the provisions FEMA proposes is the idea of continuous coverage, which would allow policyholders, and before I get to that, let me just say that from independent sources, we will see a compounding raising of premiums that will ultimately range in the double-digit range annually. Annually. Now, one of the provisions FEMA, and I'll close on this, Mr. Chairman, proposes is the idea of continuous coverage, which would allow policyholders to keep their NFIP discount if they leave the program to go to private flood insurance and want to later return to the NFIP. Do you know of any property and casualty company that offers continuous coverage?
Not that I'm aware of. But
and there's
again,
a reason
as
for that.
was pointed out, this is a government, multi-purpose government program, and that's been indicated to us that will allow for greater private sector development, which has the potential to assist FEMA in closing the insurance gap.
I don't know who is the private entities that told you that, but I have never heard of any insurance company offering continuous coverage if policyholders want to leave their insurance policies for competitors. If we offer continuous coverage, what we're setting up is the program to be cherry-picked, and we'll lose policies that help balance out the program. Insurance is about pulling risk over the widest group of policyholders. And I'm deeply concerned that what you're proposing, both in the rate shock that will take place for policyholders, which means that people will forego, if they don't have a mortgage obligation to have flood insurance, they will forego. Your own entity says that 20% of the policyholders will drop coverage. Well, that reduces the universe by 20%. The smaller the universe, the higher the rates. That's going to create another cascading effect at the end of the day. But then to say continuous coverage so that people who are less likely to face the consequences of a claim will go to private insurance, but then you'll leave all of the properties that have a challenge in the National Flood Insurance Program, and that will only create a compounding consequence. So I have real serious concerns, and I would just say to the Chair and Ranking Member, the last time we went through something similar, there was such rate shock that both Democrat and Republicans responded to it. And I hope we don't have to wait for the rate shock, Mr. Chairman, to try to solve the problem.
Thanks, Senator Menendez. Senator Warner is recognized from his office from Virginia.
Well, thank you, Mr. Chairman. And let me just add one comment to my friend, Senator Menendez. I think he has raised some really important issues, and I don't bring the expertise on this issue that he has, but I want to affiliate myself with some of his comments, particularly on issues around continuous coverage. Mr. Maurstad, in Virginia, we obviously have a sizable percentage of our population that are around coastline, rivers. It's really important in terms of tourism issues, commercial assets in Virginia. And one of the things that I hear, and I say this as former governor, now senator, is constantly from residents and businesses trying to decide, how do you make that risk calculation to mitigate against the challenge around flood risk. Now, I know you've got this new system under Risk Rating 2.0, but I've heard from a lot of communities and actual individual homeowners that this new system actually makes it harder for the individual homeowner to be able to calculate what the risk might be and make that harder to then make the decision whether they ought to make the kind of flood prevention investments. I understand that FEMA just released some online tools that were supposed to make this individual calculation a little bit easier, but I'd ask you to kind of talk with some detail about whether this will provide the granularity to individual homeowners so they can actually make this assessment in in a rational way without having to, go get some outside expertise. And, are you hearing about this? Is this, I'm sure this is not just a Virginia phenomena, but this ability to go get much more granular are you finding that in other communities as well?
So thank you, sir. There's certainly mitigation continues to be just as important today as what it's ever been. And in fact, now mitigation credits can apply throughout the community instead of just in the special flood hazard area. But most importantly, we continue to encourage homeowners, renters, small business owners to work with their insurance agents to understand the impacts of different mitigation measures and what that would do and what kind of impact that would have on their flood insurance premium. Of course, the real reason why we want to encourage people to mitigate their property is for safety for their property and their family. And
Mr. Maurstad, but respectfully, that's not my question. My question is, with this new, risk ratings 2.0, my understanding is that there's a bit more complexity there. So a homeowner trying to sit down and make that individual calculation, not based on a neighborhood, but based on his actual home, factoring in those component parts, it's tougher under this new system. Now, I understand you've put some new online tools in place, but can we provide the homeowner with that granular knowledge, to easily make that calculation for his home and his neighborhood?
So it's talking with agents and companies and policyholders. The new system is less complex than before. With the new rating engine that is in place, it's very easy for agents working with their customers, policyholders, your constituents, to determine what a particular mitigation action, if they take it, what that will do to their premium. In fact, we've had nearly 90 million quotes on our rating engine, and so it's being widely used clear across the country, and people are getting the differences in policy coverages, changes that they might make. And so we just encourage them to continue to work with their insurance agent or insurance company representative who provides that level of expertise to their customers and to your constituents.
Well, I just have to tell you that I hope that is the case, and I know you've got some of these new online tools. I'm hearing from a lot of folks that the new system may actually add more complexity on getting that level of granularity. And I do think I will go back and then maybe follow up with you in writing on some questions to see if there's ways that we can actually improve that flow of information. Thank you, Mr. Chairman.
Thank you, Senator Warner. Senator Cortez Masto from Nevada is recognized.
Thank you. Mr. Maurstad, how is FEMA working to serve our tribal communities? I'm curious, do you conduct outreach specifically to tribal communities regarding insurance policies under the NFIP?
So, Senator, the first step, of course, is to work with the tribal communities to have them be a part of the National Flood Insurance Program as a participating community. And so we work with our regional offices and tribal liaisons to see what we can do to provide them the technical assistance to become a participating community. So then the folks that they serve are able to access the National Flood Insurance Program. So yes, and we're going to continue to do more going forward based on the equity charge that we've received from the administrator and how we can provide more technical assistance to socially vulnerable communities, tribes, and other disadvantaged communities.
Thank you. I want to talk a little bit about flooding after fires in Nevada. Unfortunately, when a fire hits us, the rangeland fires, and they're devastating. We have also seen the challenge after fire because, as we know, fire wipes out the vegetation that might otherwise absorb the excessive rainfall. And because of this, if we don't have timely preventative mitigation actions for replanting and stabilizing our burned areas, we have, unfortunately, massive flooding, which is devastating to the environment. So what resources does FEMA have for replanting and stabilizing burned areas to prevent not only fires, but to address the restoration afterwards to ensure there's no catastrophic flooding that could occur as well?
So certainly our hazard mitigation assistance programs provide different opportunities for communities to bring forth projects that can reduce the loss of life and damage to property in the future. And so we would just continue to encourage communities and states to look at our grant programs and see how we can help address some of the current concerns that you've brought forward.
So what I would like to talk to you about a little bit more, maybe we'll do a follow-up. I want to see those programs because in Nevada, what I have seen is most of the land obviously is owned by the federal government, managed by the BLM, but we need help. We need support in that restoration process after a fire, devastating fire, so that we are mitigating any damage that could cause from a rainfall and flooding. Do you have specific programs in FEMA that address the vegetation, that address the replanting, the restoration of the land in particular?
No, our programs wouldn't.
So what do they do?
How
would they work with the state of Nevada or the BLM and our local
There's certainly
owners?
We can get back to you on specifics
Okay.
of other federal programs that might be available, but certainly we don't provide mitigation grants to federal lands.
Okay. Let me ask you this. In Nevada, listen, we're in the middle of the desert, but we have frequent flooding. And there are challenges over the years that we've seen from the flooding. Some estimates indicate that as many as 87,000 Nevada properties have a 1 in 4 chance of being severely affected by flooding over the next 30 years. Yet only about 10,000 of our homes are enrolled in the National Flood Insurance Program, as you well know. Do you think more Nevada property owners are enrolled in private insurance instead of the NFIP, or do you think too many Nevadans are underinsured for the risk of flood? I'm curious.
Yeah, I mean, the insurance gap is real across the country, and it certainly is real in Nevada, as you've just pointed out. And one of our objectives is to continue to work with communities that participate in the program so that there are more insured survivors after the flooding events. And so we need to work together, shared responsibility to make sure that those that need the coverage have the coverage. And quite frankly, where it can rain, it can flood, and certainly after fire, that risk is even greater than before.
Thank you. Thank you. I appreciate you being here.
Thanks, Senator Cortez Masto. Senator Smith from Minnesota, I believe, is recognized, I believe, from her office.
Thank you very much, Chair Brown, and thank you, Mr. Maurstad, for joining us today. I want to just start out by saying that I am grateful to the Biden administration and to FEMA for putting together a thoughtful package of legislative proposals that are going to strengthen our national flood insurance program. It seems to me that this is a timely reminder to Congress that we need to not just keep kicking this can down the road, but we need to really take care of this. We have done short-term extensions of the flood insurance program, I think 21 times, with 3 lapses since the last reform. So I think this is a very timely conversation, Mr. Chair, and I'm glad to have a chance to be supportive of this effort. Mr. Maurstad, I wanted to ask you a little bit about issues of a bias in the way that FEMA is working. And I mean, thinking about my home state of Minnesota, where we have lots of issues with flooding, especially in the northwestern part of the state, and the whole northern part of our state right now is struggling with flooding. But we know that we have this problem with requirements that end up disadvantaging low-income property owners and also communities of color. For example, money to fund mitigation upgrades like elevating buildings tend to be restricted to people who own their own home and can pay the cost share. Sometimes that might be tens of thousands of dollars. So my question is this, we've known that this has been a challenge. Could you just tell us a little bit about how well the increased cost share for infrastructure funds are working, and could the increased federal cost share for disadvantaged communities be incorporated into programs as we look forward?
Well, thank you. And yes, for the Flood Mitigation Assistance Program, the cost share is 90% for social disadvantaged communities. We currently have an equity assessment that is going on across our hazard mitigation assistance programs to see how we can better provide technical assistance and how we can make sure that there is equity in the manner in which our programs are implemented. So again, as it's a shared responsibility, the mitigation programs with communities and states. And so we're going to be doing outreach, and we're going to continue to solve for how we can better distribute our mitigation grant dollars.
So a recent, as I know, we all know, the federal law requires that Stafford Act aid be spent equitably. And there's been recent reporting, however, that shows that FEMA mitigation spending to elevate homes and recover after disasters have overwhelmingly benefited wealthy and predominantly white communities. A comparison by E&E News of which communities receive funding and U.S. Census data from those communities indicated that in 12 of the 18 states most impacted, more than half of FEMA funds went to wealthy and white communities. So, Mr. Maurstad, can you just address this? And there's been some reporting that also, seems to link that we don't have good data on this, and so we don't know what is happening. Yet it seems to me that we can actually see what's happening here. And I just wondered if you could address that.
Sure. As I mentioned before, we're in the midst of both an equity assessment, but also two of our grant programs, the BRIC program and the Flood Mitigation Assistance Program, are both a part of Justice 40. And so those funds that are going to be distributed through those programs will meet the requirements of 40% of the dollars going to social disadvantaged communities per the executive order by President Biden. We know we have work to do in this area, and we're committed to working with you to find out how we can best solve for the challenges that have surfaced in the past.
Okay, thank you. I look forward to working with you on this. I think it's very important, and I appreciate that. I just have I'm going to actually, what I'm going to do is submit this question for the record. I want to just note, as I said at the beginning of my questioning, that we've had significant flooding across northern Minnesota this spring in the Rainy Lake River Basin and all across the northern tier. This really caused by a ton of rain with nowhere to go, the so-called pluvial flooding that hasn't typically been covered in the way that risk rating is done in the past. So I just would like to say, I know I'm out of time, Mr. Chair, that I would like to continue to work with FEMA on this. I'm interested in how the risk rating 2.0 has so far been making it work for policyholders in different regions to be insured for the true risk of flooding. And I think that this is very important for us to continue to keep an eye on. Thank you, Mr. Chair.
Thank you, Senator Smith. Senator Tester's on his way, and he's in the skiff now, so it may take a little while. Senator Toomey and I will each ask another question or two. We're not exactly stalling, but we kind of are. But these are questions I wanted to ask and ran out of time. Mr. Maurstad, following up on the program's finances, you've proposed a new way to structure our national response to catastrophic events at Nfip. You've stated that it was not set up to handle a Katrina or a Harvey necessarily, even after factoring in reinsurance and other risk transfer programs that Nfip is using. Discuss your proposal to limit its borrowing authority and rely upon appropriations for future catastrophic events of that magnitude or larger as climate gets worse and worse.
So the basis for the accountability is the program be responsible for managed to a 1 in 20 year loss exceedance level. It's currently about $10.5 billion. And so we would work the program, manage the program to be able to handle events up to that point. If an event that exceeded the 1 in 20 year loss exceedance level, the proposal indicates that the administrator would be required to come to Congress and ask for a supplemental appropriation for the difference between the 10.5 in the, if it were today, and a $13 billion event. Part of what makes the ability of the program to manage so that at the end of the 10-year period of time, we would have 75% probability of having dollars in the fund is also what we're calling an equalization payment, which is the difference between the amount of premiums we should be collecting according to the actuaries and the amount that we're actually able to collect because of the statutory for example, the statutory limitations on how much a premium can increase in any given year. As you're aware, about 23% of our policyholders in the first year of risk rating 2.0 will actually see a reduction in their premiums, but it also means that their policy is at full risk rate. About another 50% will reach their full risk rate by year 5, 90% by year 10, which means it's going to be a number of years until FEMA has the ability to collect the premium that we should be collecting that reflects the full risk rate of our policies. So we're proposing that the difference between what we are collecting, what we should be collecting, that there be an annual appropriation for that amount. To work with the dollars that go into the reserve fund, we're proposing a change to the reserve fund, that instead of the reserve fund being collected by the type of policy you have, it would be based on risk, like the rest of the program. And by doing that, we would have a more stable ability to raise the funds for the reserve fund that goes along with all the pieces to be able to manage to a 1 in 20 year loss exceedance level. So all of those parts coming together is what would enable the program to be more fiscally sound, be able to be managed better on a year-by-year basis, and but yet be able to take care of the catastrophic events that are surely going to happen and that the program is challenged by because of our concentration of risk, which violates most insurance principles.
Thank you. We will submit for a question, a question about your proposal to cease to insure excessive loss properties. We will do that in writing. Senator Toomey.
Okay.
Thank you, Mr. Chairman. Mr. Maurstad, I have in my hands here a copy of the package. I think this is the legislative proposal that you your colleagues sent to all of the leaders. This particular one went to Senator McConnell. And I'm looking at this write-up, page 64 of the package. There's a sentence that jumps out, partly because it's in red, but partly because it's a staggering fact that's reported here. It's towards the top half of the page if you're looking for it in the document. And it's just one short sentence. I'll quote it. It says, as of December 2021, FEMA has paid $35.1 billion in claims to properties with 2 or more losses compared to the total of $73.4 billion paid on all claims. That's your information. That's not,
Sure.
I didn't make this up.
No.
That is almost 50%. So I don't think some of us are just conjuring up a problem that doesn't exist if 50% of the claims paid are going to multiple loss properties. I think that tells us there's a problem with multiple loss properties because they don't make up 50% of the covered homes. They make up a small fraction of the covered homes, right?
Yes, sir. And repetitive loss properties have been an issue for the program for a number of years. In fact, the 2002 reauthorization of the program, that was a bipartisan, bicameral reauthorization of the program, Bunning, Beerider, and Blumenauer, had a multi-loss provision in it. Unfortunately, the way that it was set up, it wasn't able to be implemented, and so it's gone by the wayside. We're proposing that, again, that we tackle this problem. And it's not as much necessarily, certainly a concern about the impact to the fund, but more importantly, these properties should be mitigated. They should be either elevated or other measures taken so that they don't provide that disaster suffering that the families are going through every time these losses occur. And so I think someone mentioned it is common sense that we should not continue after a reasonable period of time to provide insurance for unmitigated properties.
And when you talk about mitigation, isn't it true that mitigation can occur at a community level also? So for instance, I'm thinking about towns in Pennsylvania that have dedicated a lot of resources, and much of which has been matched by the federal government, to build levees and dams and systems that protect the entire community. I mean, that's a really important mitigation mechanism, totally separate and apart from elevating a house, right?
Absolutely, and also our community rating system provides discounts for policyholders in communities that participate in the community rating system, discounts from 5 to 45% based on the mitigation activities and the flood protection activities that communities adopt to make their communities more resilient.
Thank you, Mr. Chairman.
Let me follow on that, and then if Senator Test arrives, if not, we'll adjourn. I want to expand a little on Senator Toomey's question, and I said I was going to do this in writing, but let's just have you comment now on your interest in ceasing to insure excessive loss properties. Talk about addressing this category in more detail, and if you have a way to estimate the mitigation needs in those properties.
Well, so this is prospective going forward, and so we're saying there would need to be 4 losses in excess of $10,000 after the act would be put in place before a property would become an excessive loss property.
And you cease to insure then?
Yeah. And so again, it's hard to estimate what that
The $10,000 number is arrived at how?
$10,000 was arrived at a reasonable level of loss that would be considered beyond the normal smaller loss. So, I mean, it was a calculation made based on a threshold, and it could be a lot of different numbers. We're proposing 10,000 as a reasonable level.
Go ahead.
And Mr. Chairman, if I could, I'd like to clarify an earlier answer that I provided to Senator Menendez. If I could clarify.
Sure, of course.
So he asked about the impacts of risk rating 2.0 and the rates on Hispanic and African American policyholders. Equity is a top priority for FEMA, and we care deeply about ensuring that any underserved community that they are insured, and that's why we have proposed the affordability mechanism. And so I don't want my response to be mischaracterized, and I appreciate your giving me that opportunity.
And Senator Toomey wanted to insert something about the question of excessive loss property.
Yeah, and that is, am I correct in understanding that FEMA's, I think you just said it actually, that FEMA's proposal is to look only prospectively at repetitive loss, which means you would be suggesting that we simply disregard properties that may have had literally dozens of paid losses in the past. We'll wait for 4 more before we do anything.
That's correct.
I think we have to consider whether there should be some other approach to, whether there's some threshold above which historical losses have to be taken into account.
And that's something I think we should consider also. Okay. Any other comments on that? On the excessive loss?
I mean, the legislative proposals that we put forward have been developed over a 10-year period, and quite frankly, over the last 3 administrations by career staff who are experts in the four fields that you mentioned in your opening comments. Certainly, we want to continue to work with the committee as we have in the past in coming up with the best solutions to the challenges that we've identified. And so if there are various aspects of our proposal that we need to provide additional either information on or technical assistance, technical drafting assistance on, we want to do everything we can to assist the committee in making sure that we can have a long-term reauthorization of the program with meaningful reform by September 30th of this year.
Thank you, Mr. Maurstad. Thanks for joining us today and providing your testimony. Senators wishing to submit questions for the record due 1 week from today, Thursday, June 30. To the witness, Mr. Maurstad, you have 45 days to respond to any questions. Thank you for your public service. The hearing is adjourned.